Hello folks, this is Raj Sastri from Raj Option Trading. Today I want to talk about the option trading plan for next week. So today is 28th of March, next week is 29th. Let's quickly talk through a few thoughts for option trading. Before I cover option trading plan for next week, I quickly want to touch on few things. When it comes to technical indicators, we got three types of technical indicator. First one is trend trading indicators, like moving average. It will tell you the trend is trend is in shape at this point. So, for example, if you have a stock which is above, say, 10-day moving average or 21-day moving average, then you know it's trending higher. And similarly, if it is below 10 days moving average, 50-day moving average, you know there is a downtrend. So that's a good trend indicator. So when it's trending, you can leverage the trend techniques. For example, if there's uptrend, you can buy call, you can sell put, and you can do these type of techniques. And if there is a you cannot do reversion to the mean techniques like iron condor, butterfly, and strangles when there is a trending market. So you'll get into serious trouble. Then we got oscillators like relative strength index, stochastic. These are the oscillator. When the market is oscillating, that's when we can leverage reversion to the mean techniques like butterfly or condor. You can even buy put when it hits resistance ceiling. You can do those type of things, including strangles. Then we got this volatility based indicator, for example, squeeze. So, this is when you have a squeeze, then you can do, there is a volatility compression. Stock is going to move away from the trending, from a oscillating market to a trending market. So that's where you will understand there is a switch between a oscillating market and a trending market when there is a squeeze. Depending on the bias or the direction of the bias, the squeeze can be for long or a higher stock price, or it can go on the shorter side. So this is when we'll employ some of the techniques depending on long or short. So that's a quick description about the types of technical indicators. Now we'll go into the squeeze itself. So in the squeeze, the red dots indicate the tight compression of volatility. So the market is going to switch between a oscillating market to a trending market or vice versa. First green dot after a series of red dots that will indicate the energy is ready to be released. Now market is going to switch. So at this point, if the histogram is above zero, then it's a long trade. You could do things like long call, probably delta 70 or higher, or you could do things like call spread. You could even sell put option because market is going to trend higher. So as you look at the squeeze, you can also look at the waves. We have in Thinkorswim we got A wave. This is a little bit shorter term trend, and then you got C wave, which is a little bit longer term trend. So what you can do is really when there is a squeeze, if the histogram is above zero, if the A wave as well as C wave are above zero, then you have a bullish bias. So you can do things like buying a delta 70 call spread. You could even sell put options as an example. And in the wave itself, you got a yellow bar which will indicate a little bit bullishness. They got a red bar which indicates the bearishness. This is in the A wave or a shorter term wave. And size of the bar itself will indicate the extent of bullishness or bearishness. So we'll step through some of these things as we go into Thinkorswim platform. And the C wave, we got a light blue bar, which is bullish, and the dark blue bar, which is bearish. So with that in mind, let's look at a few ideas for next week. So these are few stocks that I'll be watching. These are for long trades based on trade the TTM squeeze methodology. We'll go to Thinkorswim platform now and look at some of these ideas. So first, let's look at ADI. ADI is, I think it's buying Maxim Integrated, which is a chip, which is in the chip sector. As you can see here, I will also make it this little bit bigger to see it better. So here we got a squeeze. So this is the TTM squeeze itself. As you see here, the histogram, went from above zero to below zero. The red bars became big and big and big. That will indicate bearish sign for the stock. So as the bar became bigger and bigger, stock kept falling and falling, as you can see here. Now suddenly we got a yellow bar here that will indicate what the stock is going to take a it's going to be positive from now on. So now you will also see the yellow bar being shorter and shorter and shorter. This will indicate stock is getting momentum on the higher upper side. And then you will see a switch from a histogram going from below zero to above zero. You can see that with a small blue bar on top. The light blue bar, as we talked about earlier, indicates a bullishness. So from a squeeze perspective, right now the histogram is going from below zero to above zero. From a squeeze perspective, it's a positive bias. Next, we look at the TTM wave itself. This is a shorter term wave. Here also, the red bar indicates a negative bias. As you can see here, as it became red, stock also kept falling. Now it became, the yellow big bar, small bar. As it gets smaller and smaller, it will try to cross above the histogram, and it will give a positive bias. And last but not least is a C wave, which is a longer term wave. C wave itself, the moment it's a light blue, that means it's a positive bias. The moment it's a little bit darker blue, it's a little bit negative. But as long as it's above the histogram, above zero, then it's a positive bias anyways. So in this scenario, because the longer term C wave is above zero, shorter term A wave is trying to get above zero, and we got a squeeze. Again, we got a bar above zero. This will indicate a positive bias in the shorter term, in the 1 day, 1 year, 1 day chart. So that's a bullish. It's a squeeze. We will probably see a green dot some point that will indicate the squeeze has released an energy, and with this bias, most likely stock is going to take off on the higher side. Similarly, we got one more squeeze shaping up here in the 2 day chart. If I make it a little bit bigger here, same story. We got histogram here, a lot of red dots here. We got a small yellow bar indicating there could be a positive bias as you go forward. Shorter term wave again, as we talked about, there is a small yellow bar. It might, the bars are getting a little bit shorter. As it gets shorter, we might get a couple more yellow bars on the shorter side. It can go above zero. And long-term wave or C wave is clearly above zero. We got a lighter blue color here indicating a little bit strength here. The darker blue is a little bit weakness. Lighter blue is strength. So because the longer term C wave is above zero, there is an indication that this will be firing on the higher side. That's the thought process here. So here what we can do is, with this understanding, most probably it's going to fire on the bullish side. We can also look at one more chart here. For that, let's go into the one grid chart. So if you look at this one grid chart, I'll make it a little bit bigger here. ADI, analog devices. As you can see here, stock is trying to get some momentum here with the green bars here. And if you look at RSI itself, RSI is showing some strength. It's trying to become bullish. And if you look at DMI, it's a good volatility or a momentum indicator. We got blue line here trying to go above the ADX line, going above red line. That's a positive bias. And we got check in money flow again, giving us a positive bias. So with that, I feel like, hey, this is a good trade. You could either buy delta 70 call, or you could do a you could do a spread because stock is a little bit at a higher level. So for that, we'll go into the actual trade tab here. We have ADI. I typically like to go a little bit longer time frame, 173 days out as an example. Stock is at 157. I could do 150, 160 call if that's one way to do it. It's a $10 spread. So if we do this $10 spread once 150, 160, so I'm paying $4 and 85 cents. So if you remove 10, it's a $10 spread. So I have room to grow from $4 85 cents all the way to $10. That will give me $5.15 profit. If stock goes above 160 by the expiration time, I don't need to wait till the expiration. I could close it out in between also. As you can see here, if the stock stays above 154, which already is by this expiration date, we'll make money. The maximum profit is 515, and buying power effect is whatever we are paying right now, 485. It's a good trade. Basically, you're almost doubling your money. You pay 180 485 and you're making 515, which is good. You can kind of double your money if stock does very well. So this is one way to do it. But if you're even bullish, you could also go venture out and do either 165 or 170. Let's see what we have here. So we got 165. You could do $15 spread. That will give you a little more, um, room to grow. So you're paying 660. It can expand up to $15. So that will give you room to grow. In here you're paying 660, but your max profit is 840. It's if you're bullish, this is another way to do with a little more capital upfront. Third one, of course, is you could do just a delta 70 call. So you have 77, 73. So you could buy this. You have to pay $23. Only downside is it's a little bit pricey. But if the stock moves by $1, the option itself will move by 73 cents, which is a good deal. But if stock falls off, you're losing bigger amount of money, which is 2,320. So, depending on your capital level, you could even do delta 70 call or something like this, or you could do spreads like we talked about, $10, or you could do, if you don't want to risk too much money, you could even do a $5 spread. You could do 155, 160 spread. You could buy this $5 spread. So if you do that, then you're paying 245 and you're going to make 255. That will make $5. That's your max profit. Basically you're almost doubling your money here, and your downside risk is low. Your risk is just $255, sorry, $245, whatever money that you're paying right now. So that's ADI, analog devices. Next stock we'll look at is KLA car, KLAC. So if you look at KLAC here, it's went up $20 already. So probably let's see what's the max amount. So 52-week high is 342. If you were to play this stock, what I would do is let's quickly look at the chart here. So if you look at the squeeze chart, as you can see here, we got a nice squeeze forming, in 1 day, 1 year chart. So as we talked about earlier, the way to read this is we got a red bar getting bigger and bigger, indicating bearishness. Then we got a bunch of yellow bars indicating strength, and it's trying to cross above the histogram, which is a positive bias. And the shorter term A wave, it's just crossed above zero. The yellow bars indicating there is a strength. Yellow bars are getting shorter and shorter. and trying to cross above zero, which is a bullish bias. And on the C wave itself, like we talked about here, because it's above zero, it's a bullish bias. And the dark blue is a little bit bearish, the light blue is bullish. But overall, if this if the bars are above zero, in this case, all the bars are above zero, it shows there is a positive bias. So with this, it's a positive bias in a 1 day, 1 year chart. And we got a squeeze about to be forming here. Um, and here, squeeze has not formed yet. When the squeeze formed, you'll have first green dot forming here. That will give us a good confirmation. But people sometimes don't wait till the green bar. They will look at the shape of the wave itself. If they think, this type of setup, people kind of, go before the squeeze forms, and they would, they would buy either the call option, call spread, or even they could sell a put spread at the, lower price. So if you look at here, two-day chart, same story. If I make it a little bit bigger here, we got a squeeze about to be formed. We got first yellow bar after a couple red bars indicating there is some bullish bias. And in the shorter term, A wave, the yellow bars are getting shorter and shorter. Yellow bars are, as we talked about, it's a positive bias. The bars might go above the zero level, which is a positive bias. And here also on the longer term C wave, we have all the bars above zero, which is good sign. And as you can see here, we got one lighter blue bar, which is indicating there is some strength shaping up, which is a good sign. So with these two indicators, I think KLA10 is probably is going to fire on the higher side with the positive bias. So to play this, we can employ similar strategy like we talked about earlier. So let's go to the option chain here, KLA10 core. I would go like 110 days out, which is always good to have some more time when you are buying the call option. And here 319, so I would do something like let's go here, 320. So if you are very conservative, you could do 310, 320. Let's see how that will pan out. So for this 310 to 320, you're paying $5. The spread is $10, so your profit potential is another $5 more. You're paying $5 to make $5. So basically, you're doubling your money. So if you do that, you can see here you're paying $5, $500. You're making $500. If the stock stays above 315, which already has, you'll be breaking even. So this is one idea. And if you want to employ little more capital, you could even do 320 and 340, a $20 spread. So or 330, yeah, it's a $20 spread here. You're paying $9.25, and you're making 1,075. It's a little more than doubling your money. Your risk amount is really whatever you pay, which is $925. And last but not least is doing something like a delta 70 call. So you pay $54, and basically you have unlimited upside potential as the stock moves up. Every $1 move will result in option price being higher by 74 cents, and vice versa. So this is another way to play. For this you got to be a little bit careful, and clearly don't hold the option till the last expiration month. If you get good amount of profit, you should probably get out of the trade. So those are the ideas. For I will not go through all of them, but you get the idea. So you've got ADI, KLA10 core, Lam Research, Waters, DOMO, Hasbro, MCHP, GRA, and SHAK. You could employ similar strategies here. Buy a long call, long spread, call spread, or you could, if the IV is high. In this case, the IV rank is all low. So when IV rank is low, you should really employ the strategies like a long call, delta 70 or higher, or call spread, or those are the good strategies. And because IV is low, I would not sell put options here, because you would get more money selling put option when the IV rank is higher. With that, thank you very much. Happy trading.